Hello, everyone. Good morning and welcome to the PropIndex webinar. I'm Abhishek Bhadra, Head of Research at Magicbricks. We will be discussing today the consistent bull run in the Indian real estate market that we are seeing and early signs of stabilization over the last couple of quarters. To discuss this with us today, we have Mr. Ritesh Mehta, Senior Director, JLL, Mr. Rajiv Dash, Head Sales and Marketing, Adani Realty, Mr. Rupam De, Chief Marketing Officer, Shade Creators, and Ms. Avni Sangvi, Promoter at Veena Developers. A very warm welcome to all of you. I'm going to start by talking, about the recent PropIndex report that was published last quarter, and then we are going to get down into the Q&A and talking about the key trends and insights on what is impacting the Indian real estate and Mumbai real estate market today. So we have been doing PropIndex for quite a while now, and the insights that one can get from this report is demand supply analysis, rate movement across cities and pan India, key localities where most of the demand and supply is coming, and key projects, developers, and also we talk about size wise, BHK wise, and segment wise price movements and demand movements. We cover all the 13 cities of India and also talk about the holistic view of what's happening at a pan India level. So I'll start with the demand. Post COVID, there was a sustained bull run which we experienced over the last couple of years, starting Q1 2022 till about Q1 24. There was a consistent rise in demand. We saw, an increase of 12 to 14% QOQ demand on the traffic that we saw on the MB portal, right? But in the last quarter, we saw early signs of stabilization. Demand rate was kind of moderating, right? Favorable government policies and focus on infra and housing for all can stabilize demand needs. So all of this is happening across India, and increase in housing prices also triggering a slowdown in the demand. If I look at the segment-wise performance, 2 BHKs have clearly been in favor in the western side of India. So if I look at Navi Mumbai, Thane, Mumbai, and Pune, clearly 2 BHKs seem to be what consumers are looking for, followed by 3 BHKs and luxury segment. On the other hand, if I look at the NCR market, the northern side of India, we are looking at much bigger sized apartments, being preferred by consumers. So 3 BHKs are in flavor and 3 plus BHKs also. If I look at the supply trend, since Q1 2021 till about last year, about Q3 2023, there was a decline in the supply, obviously, which could be a result of sales, consistent sales happening, and a lull in the new supply of projects by developers. However, if you look at MMR, the last couple of quarters, we have seen a slurry of new launches coming up. Similar trends has been also seen in other parts of India. And if I talk of the new launches, multi-story apartments seem to be the largest segment which developers are launching. So 5.7% was a QOQ growth in the Mumbai supply existing inventory, which outpaces the 3.5% growth in supply at a pan-India level. On the pricing side, yes, we have seen consistent increases of around 8 to 10% quarter on quarter in the last couple of years. The last quarter was no different, although demand was slightly moderated growth, but the price movement was still there. Hence, we can very safely say that India seems to be in a bull run, and the next few years seem to be very positive for the Indian real estate market. If I look at the road ahead, stable interest rates, preference for compact homes, growth in new launches, supply, and rise in property prices, are expected down the road. So with that, I finish my presentation. I'm going to now, start with the Q&A. So we are seeing that demand growth seems to be moderating in the last couple of quarters, although there was consistent increase over the last couple of years. But if I look at Q2 24, there are early signs of stabilization in the market. Supply is picking up. Demand seems to be moderating. Prices are increasing, but not at a higher pace. Seem to be a slower growth on that side as well. So I would want to know, like, will it be safe to say that the property prices in Mumbai real estate market are now starting to stabilize? Can we have Ritesh on that, please?
Yeah, hi Abhishek. Good morning. Good morning, everyone. So I would say, 1 or 2 months demand moderating could be an aberration. I think it will take another quarter to decide whether the demand is getting stabilized over a period of time. Because I think last quarter we had elections, I mean this quarter, where the supply and demand both were actually on a wait and watch mode. Obviously, one more reason is the price hike the developers had in MMR, which is close to 4% in last 1 year. Again, adds up to a lot of unaffordability for a two-bedroom buyer. And as we spoke, the major demand in MMR is coming in from two-bedroom, and those are middle-class segments. So there would be some stagnation in terms of price hike for 2-3 quarters, but I think this quarter could be an aberration. It's still a long way to go. And also, one thing we need to really factor in is the kind of supply coming in last 2 quarters, which is 6 months. So those are across the segments. It's not only in luxury or mid segment or affordable, but the supply has been consistent and the growth has been quite high. So the option to the customers have been all time high. And that's the reason we are seeing some sort of stagnation. I wouldn't say the demand is going down. Again, repeating that it could be an aberration, but we'll have to wait and watch for another 1 quarter, because again last month we had 12,000 plus registrations happening in June. So overall Q on Q, quarter on quarter, the growth might not be substantial as before, but the good sign is there is a growth and there is a green trend, green line going on. So that's from my end.
Abhishek, if I can add one point to it.
Yeah.
See, Abhishek, I think there are two things. One is that number of units and the square feet. The trend used to be that people were preferring the bigger size. Now that used to be the story 1 year back. Everybody is looking for bigger size. So the area that we used to sell used to be the higher. But
Right.
today, if you see, the number of units have not gone down. I think number of units have been going up as per the demand, but the square feet has reduced. So if I used to sell more of 3 and 4 BHK, now I'm selling more of 2 and 3 compact 3 BHK. So that is something you need to correlate in terms of numbers. I don't think its square feet may have reduced a bit, but the number of units that if you see, it is going up. So that means there is a end user who is coming. The post-COVID, people used to get into larger size apartments. Those who used to buy 2 BHK, they went for 3 BHK, 2 BHK with balcony, and all those things happened. That extra room concept was very much there for some time. I think now that is now coming down, where people are looking for exactly what is the ticket size and how much I can afford for the unit and configuration. I think it's a unit versus square feet. I think that's a true thing. Otherwise, I don't think demand is coming down.
Agree with you, Rajiv. We have also seen that compact 2 BHK apartments are what seems to be searched by consumers. So they are looking for 2 BHKs, slightly premium 2 BHKs, but size-wise, I think it's kind of coming down.
Absolutely, and that's where you will see square feet is coming down overall, but the numbers are not coming down.
Numbers
so somewhere
not.
that correlation one has to see.
Got it. Avni, you want to add something to that?
So definitely when there is affordability attached to the apartment, there is seen a large number of users who are ready to invest in it, and that trend will be there because the middle class segment, with the youth segment itself, is demanding a lot more number of 2 BHKs. So that demand is there to stay.
Got it. Rupam, you have any viewpoints on that?
I would agree with Rajiv, stating that the demand has not gone. People are actually looking for compact houses, and what we see, the people are more inclined. They don't have a financial glitch on paying a 100% due. They want a ready to move in properties at the moment, especially the micro markets like Malad, Kandivali, or Andheri, or Yogeshwari. This pocket we've seen over a period. See, they're looking for a compact houses because they want to upgrade their lifestyle and everything. So everyone wants to invest in a property. Everyone want to have an address in Mumbai. That's exactly what I would agree with Rajiv on that point.
Understood. The other aspect that we noticed is under construction properties are, the prices of under construction properties have significantly increased, and in some cases, in some localities, it is gone beyond ready to move properties. What is triggering this kind of trend in the market? I mean,
So two reasons, Abhishek, I would take it up. One is the supply coming in from tier one developers are increasing, and those are large layouts with all amenities and all.
hmm,
So one attribute I can clearly see is if the supplies from tier one developer, people are not wanting to wait till possession, and there is some fear of loss with the upside trend in last 3 years. So people are going and taking decisions. So under construction, that ways not only the sales but also there is a price hike in under construction properties, and secondly there is a dearth of supply in luxury segment and also ready to move in apartments. So hardly there are 2-3% inventory when we come to the main core city of Bombay, which is MMR. Within MMR, I think there is hardly, we don't see any building which is vacant whenever we travel. I mean, no matter what, where it is, but I have hardly, very seldom seen any building or any apartments being vacant after OC or maximum 3 months after OC. So there is no supply in ready to move in. So people are obviously forced to buy under construction, and especially the supply coming in from tier one developers really complements this thing. And that's the reason you are seeing a better growth in terms of price for under construction properties.
right. So you mentioned some of the micro markets like Malat, Kandivali, Andheri West, Jogeshwari West. So these seem to be, and Panvel in Navi Mumbai. These are the high searched localities in Navi Mumbai. And if I look at Thane, then Western Thane, Ghodbandar Road, these seem to be the top localities in Thane as well. So, and are these like because these are commercial hubs also? Is this the key reason why consumers are drawn to these localities? Uh, and how are developers? What are the developers' strategy to come up with new projects in these localities? And are they looking at other new localities as well? Uh, Rupam, you want to have a go at that?
See, basically, these pockets are basically a recreational and a business hub for people coming outside. Okay, and this is like the emerging, having said the new airport coming in and the emerging IT development. So people have more of work from home culture. So in this locality, people want to have, as I mentioned previously, they want to have a particular location and an address in this location. So as a first year developer, it is more prominent to have a project in that location in order to get the buying sentiments index in a higher rate in compared to a suburb which is stagnant. But as far as I understand, as you mentioned, if we see the top three tier cities, MMR still continues to dominate the demand and supply game in these pockets. So micromanagement, see customers within a 3 kilometer radius that we have seen, people actually come, and the requirement in these pockets are much higher.
There are a lot of developers from other parts of India that are now coming in Mumbai, right? If I look at Bangalore, Delhi, DLF is also starting new projects in Mumbai. We're also seeing some developers from Bangalore coming to Mumbai. Uh, I mean, we all know that MMR is the biggest market in India, in terms of if you look at supply and also transactions. So, with this, new developers coming in from other parts of India, do you think this market is going to get crowded now? And how are existing developers going to tackle this problem? Any particular strategies to tackle this?
It's a clear
Avni?
question to Rajiv. I think he should be able to answer this.
Sure.
Yeah. So, Abhishek, if you see, the market is growing today with the physical infrastructure push that is happening at the ground level. Today, Bombay is expanding to Navi Mumbai, Panvel. Those are the locations that are coming to the forefront. Today, because of the infrastructure push that the government is doing, there are a lot of new markets are getting open. And it is the MMR which contributes the highest to the real estate as a category. With the supply of land, the raw material coming to the picture, I think it is welcome move that a lot of developers, A-grade developers coming to the market. It will be interesting marketing dynamics that people not only buy for end using, but they will get an option to have an investment as a retail investors. Like if you see today, the stock market is doing well. I think every time we have a correlation with real estate. When the stock market does well, you'll have some bit of time gap, but real estate will pick up because people will, get gain money from stock market. They try to invest in a long-term investment category like real estate, and that's where you will see the linkage what Ritesh was talking about the under construction. Today, why that segment is doing well because of the flexibility in the payment plan. Today, if I buy at the MI, I don't want to put 100% when maybe stock market is doing well, particularly for MMR where a lot of people are investing in a stock market. So they want to have that flexibility. If I have a bullet plan, I have seen in most of our projects, if I have a bullet plan that you pay 20% every year, that does very well because the customer is very happy to pay once in a year 20-25% whatever is required, and that is where the under construction segment has that flexibility which is not there. And in the new market opening up with the Navi Mumbai market, Thane, Gorabanda Road, all those things are giving customer the affordability in terms of the ticket size. Today, you can buy a compact 2 BHK as a good ticket price, and that is what is driving the other developers to come to Mumbai MMR region. And you will see Panvel with the airport opening in next 1 year or less than 1 year. You see that market is going to open up to a larger scale. The kind of land parcel which are getting unlocked, the kind of township projects that's going to come up. I think those are the plus point for a real estate category that MMR has that kind of supply of land and the raw material. And it's good that all the developers are coming to Mumbai. It will have a better choice for the customer.
So you mentioned investment potential of real estate today for a buyer. One point that comes to my mind is since we are in this, consistent growth of momentum in the market and price appreciation is there, people are also getting good rental yields on the rental market. What kind of customers are developers in MMR seeing? I mean, are they more of end users, or what kind of investment penetration is there in this market for a customer? Are there more investors in the market today than say?
There are two segments. What we have seen recently, at least in a year or last 9 months, the two segments. The end users, they are coming. They are looking for upgrades. That end user is very clear whether it's an upgrade in terms of size or maybe from a standalone building to a complex or to a gated community. So in terms of the amenities, specifications, upgrade. So end user is clear that I am looking for a better lifestyle. I'm upgrading my lifestyle. Then there's the other segment which is picking up now in a market which is developing corridors, not like South Bombay or Western Java, but the developing corridors that you named like Thane, Gorabanda Road, Navi Mumbai, Panvel. There, a lot of investors are now pumping in terms of long-term investment. And that is where you'll see the growth is coming in terms of numbers. If you see the numbers also, the numbers are higher there because you are putting a lot of retail investors there. And they are picking up units thinking that the future, the appreciation will be much better because the infrastructure story is going to be there for some time. And that will push the price as well. So there are two segments. End user upgrading to better facilities, amenities, specification, complex, gated community. Then the investor coming who is picking up the lower ticket size item for a long-term investment. So there is two segments which are there clearly.
Understood.
Avni, yeah. Sorry. Avni, you want to take it up or?
Hi, Ritesh, you can go ahead.
Yeah. So according to us, in 2021, there was 93.7%. So 93% of the sales what happened were from end use and 7% were long-term investors.
Okay.
That ratio has gone up from 7 to 11 now, investors. So as Rajiv mentioned, the new corridors are getting opened and investor categories increasing. Also, one thing in last budget, what we had was the increase of tenure for stamp duty offset from 2 years to 3 years. So a guy who is buying today from a developer, and if he sells within 2 years, which was earlier 2 years in old regime, and now it is 3 years, he can sell within 3 years to a new buyer, and there is a saving on stamp duty. So the entire stamp duty offset is still there. So it's a direct move where the government and also the authorities are encouraging people to buy real estate as an investment, but on a long run, not for a short-term speculation kind of thing. So yeah.
Got it. Avni, coming to you, we are seeing, increased interest coming in from Gen Z and Gen X, buyers, people in the 30s and early 40s. They are, they account for more than 75 to 80% of the demand that we see on our portal. So, is it something that's happening on the ground as well? I mean, as a leading developer, are you seeing demand coming in from Gen X and Gen Z buyers?
So there is a lot of demand coming from people of the age of 30 to 40 years, wherein to have their families have a stabilized home and have an environment where the children can grow and prosper and have those amenities for their overall development. So the generation between the 30s to 40s are very well aware of the responsibilities and are wanting to give their future generation that which they had not gotten or better versions of what they had gotten. So yes, there's a lot of demand coming from that segment.
Understood. Rupam, what about your customer base? I mean, are you seeing a lot of youngsters coming
So
in
when you
and
talk
buying
about the
properties?
millennials and the Gen Z, we see in our property the absorption of the configuration 1 BHK is fast moving than in a 2 BHK. So majorly, if you see, our projects are basically in the corridors of the suburbs. Okay, my lads. If you see Irene, that's a project that we have a major inventory of 1 BHK. We see a lot of IT people, the Gen Z people, who keen to invest in order. It's a long term investment for them in order to do a tax savings and everything. So we see a lot of absorption in terms of 1 BHK in these corridors for our project, technically.
Coming back to Rajiv, we are seeing, as you mentioned, that premium compact homes are on the rise. Although we are also seeing that luxury market is also growing as parallelly. But if I look at the next couple of years or the future of Indian real estate, especially in the tier one cities and metros, do you see the luxury housing market facing any kind of challenges? And if there is a challenge, how do developers plan to tackle it?
See, the luxury segment is going to grow up because purely from the point of view that the income levels have gone up. If you see the income level report that has come, the people are becoming more affluent, and that is the story which is there. The middle class is going to the upper class, and the HNA segment is growing, and that is the aspiration that the luxury segment is going to grow up. Also, at the same time, if you see luxury segment going up because of limited supply also, because luxury segment coming in a location like say South Bombay, Western suburb, or a BNC corridor, the supply is already kind of limited because of the land block. So that is where the story of a luxury segment is being there, and they don't get impacted by the smaller aspects like interest rate going up, interest, home loan interest, and other things. That doesn't make any kind of disturbance to their investment pattern or their buying the upgrade story. So luxury segment is going to be there. There are one particular thing, luxury segment in a micro market. So you have to boil down to the micro market level because the location story is there for luxury segment. You need to be bang on a better location within the suburb. So, and that's where it works out. That location, it again still there for luxury segment to an extent that people prefer where you have a better location to offer a product. And that is there. So we have seen the luxury segment going up, but the size story, whether people used to buy larger size in terms of 3 BHK being say 2000 plus square feet, that is getting reduced. So we are now boiling down to 17 to 1800 square feet. So that 2000 plus story is coming down to 17, 1800 probably. And I think that is something that we need to see that is it going to continue or there will be some movement after some policy changes that's going to happen. I think otherwise the segment is doing very well and it's going to grow up.
Ritesh, just wanted to come to you. We did a recent study where we tried to analyze the affordability of residential markets across the key cities of India. What we found out was that MMR is having a property price to income ratio of around 10, which is like, for a middle class buyer, that person will have to spend 10x of the annual income that he's earning towards a home purchase, which seems to be very high in today's scenario, considering that income levels are also rising, right? So uh, these affordability concerns seem to be, a serious threat to the market, or do you see this as a temporary move and also an indication of prices to not grow further? You know, so Ritesh, do you have any
No,
opinion on that?
Abhishek, yeah, definitely. I think it's a serious threat. Today, we are only discussing MMR. But if you look at the growth story of a tier 2, tier 3 city in last 3 years, it's way ahead than Bombay. I mean, logically speaking, we are only talking about demand, supply, price of MMR. But the major impetus for the tier 2, tier 3 cities growing was the affordability index. Like in Bombay, if
Yes,
you earn 100 rupees, you pay 50 or 70, between 50 to 70 rupees to cater your home loan.
correct.
Now, this will not get decongested till the time government comes up, or probably RBI decides to lower down the interest rate. So I can see only one way headway is decline in interest rate, which will help middle class directly, and also the affordable segment. But for Bombay, on a city like Mumbai specifically, and on the headwinds of Pune and Bangalore also, the affordability has gone all time high. I mean, if you look at, and that's the reason, majorly reason people are more keen and they are shifting their interest towards tier 2, tier 3 cities.
Avni, we have seen that the infrastructure projects wherever they kind of develop, a lot of demand picks up, and developers also start launching new projects. With the Navi Mumbai International Airport now coming up, how do you see that as a key trigger point for new launches and developers strategizing?
So there are a lot of developers who are rushing the Navi Mumbai market for their upcoming projects, and this will cater a lot of investments in that market, and this will cater a lot of people who want to invest and get good returns. And I have few of my friends buying in that market, rushing to buy in that market. Though they live in the cities, that because they see as an upcoming opportunity where they should be investing, and they should see that their investments is there in Mumbai, in that part of the city where the growth is happening. So I'm pretty sure that Navi Mumbai will be the next MMR.
If I say, obviously the market is currently in a bull run, it's looking positive. What will be the outlook of MMR's market over the next 5 to 10 years? If we can do a roundtable on this, starting with Rajiv.
See, the real estate, if you see the trend so far been really been positive. And if you see the demand side, as I was telling you, number of people buying has increased. Maybe the size has reduced, but the numbers are going up. And that's why Ritesh was talking about the registration data also. If you go by that, the numbers are going to go up. The second thing is that with the opening of the new corridors like Panvel, Navi Mumbai side, you'll see a lot of other configurations coming to the mindset of retail investors and end users. Like if you see today, the trend is that a lot of people are buying plots and villas. I think that is something will add to the overall real estate revenue for the builders. So a lot of builders are now looking for a land parcel where I can build a plots and villas and give it as a township concept. I think that is going to be a big trend in next 3 to 4 years. I see people buying somewhere as a second home, third home, or maybe a weekend destination. And if when the infrastructure is in place, that can be the primary home also. So today, that opportunity is there. Today, I can call it as a second home or a weekend destination, but that's going to be a primary home maybe down the line 5 to 7 years when the infrastructure is in place. So I see a great potential for real estate in MMR with the infrastructure going to be developed in a pace that is not expected earlier. So that is going to kick off a lot of investment coming from other side. Like say, if you see people investing from tier 2 city in Bombay, that has also gone up. So one of the trend I have seen is our projects is that it's not only the local micro market that people are coming and buying houses in Bombay, but people from Ahmedabad, Surat, Pune, those are the people are now started buying, and that percentage has gone up. It used to be there in a smaller number, but now that has gone up. So somewhere that mega city tag, it is now coming back with the infrastructure. being in place. And you'll see that will drive a lot of distribution in terms of going to tier 2 city, tier 3 city, NRI market. Those are pushing the number. So one is domestic market that we have been talking about, registration numbers. The other part that you have to see in next 5 years, which will give a lot of volume, is the cross markets like Pune, Ahmedabad, Surat, adding to Mumbai real estate revenue. Then the NRI segment. Today, NRI segment is investing a lot because I think they are getting a rupee appreciation in a bigger way. 7 to 8% gain is there, and that the saving that they have, they are investing in real estate. So the NRI market is the other potential which is growing fast, and that will contribute a lot in the next 4 to 5 years.
Great. Ritesh?
So from 5 years outlook, I'll segment into three categories, Abhishek. One would be affordable, the second would be affluent, and the third would be luxury. So when we talk about affluent, it would be mid-segment or the middle class one. And just to answer this question, from the affordable category, I see sales going up and the prices remaining moderate for next 5 years. Primarily, the push from the government in PMAY scheme, where there would be a lot of supply, and also the per person income is also increasing in the lower category. So I see sales going up, but the prices will remain moderate because of the supply. From the affluent segment, I see the sales would be moderate. The prices will go up because the land cost in the category of Malad, Kandivli, or acquiring redevelopment projects, the cost is getting high. So the developer is under pressure to increase the value, increase the price. So price will go up, but sales will slightly get moderated. It will not go very robust in affluent segment because of the affordability issue. The interest rate is 9.5%. It's all-time high, I would say. Although we were able to sustain because of the end user demand, but on a longer perspective, I think that is something which we need to wait and watch. And from the luxury segment, I see sales also going up and the demand because of the increased demand. And the prices will also shot up because ultimately the nature of luxury is extinct. It is always in limited quantity. So the limited edition category will not get affected. There would be some defer of sales in luxury category because most of the buyers would want to buy when it is ready, when they want to feel the luxury factor in a product. So there would be defer of sales for 6 quarters, 7 quarters, because we are going through that cycle of sustainability of a project cycle. So after say 2025 end or 2026 start, we see a lot of this kind of projects getting delivered. So there you might see some spike in sales in 2025-26, but for the next 3-4 quarters, it might get deferred. It doesn't say the demand is going down. The demand is getting piled up, ultimately getting encashed in 2025-26. So that's my view on 4 years, 5 years horizon.
Avni, your views?
So with the International Corporate Park coming in, the Naravi project coming in, the Central Park project which is proposed, and the Savory Worli connector, Versova, Virar Sea Link, and the 6th tunnel which is there from Tikujiniwadi to Sanjay Gandhi National Park in Borivali, and the emphasis for Make in India which is coming, the emphasis on PropTech, investing in PropTech technologies which is coming. There's a lot of, there's a good that we can see for the coming 5 years, which will lead to infrastructural development, leading people wanting to invest and buy their homes in Mumbai and the regions around. That would be my take. And the 3 to 5 years, the 3 to 5 years to be very good in terms of the real estate market, where we see slow and steady growth as well.
Great. That brings us to the end of this webinar. I hope it was very insightful for all of you as it was for me. Thanks for joining, and look forward to speaking to you again.
Thank you so much.
One thing, I would say one thing is that what Ritesh was talking about, the demand getting piled up, that is somewhere you should see a project life cycle. Your pricing is also structured in that way. Initial pre-launch, your pricing will be attractive. Then when you start getting into the life cycle of the project, the prices also goes up. So you'll see that pricing trend also going up in terms of the pricing movement when the project comes closer to position or building getting ready. So that pricing movement also is somewhere correlated directly to the phasing of the project and the life cycle of the project. So that movement will happen.
Yeah, and I think that is also a key reason why somewhere we are seeing prices
under construction.
Correct. So because the supply and people buying more of under construction, so your pricing is kind of normalized there. So it is not going up because it's a pre-launch stage. A lot of projects that got launched in last 1 year, 2 year, those are in the pre-launch pricing. So once the construction comes to some level, then pricing goes up, and that product pricing in terms of the phasing is critical, and that's where the movement will happen in next couple of quarters.
Yeah, I mean, that's what we are also expecting, that it's going to the graph is going to flatten out a bit, and I think it's going to stay that way for the next 2 or 3 years at least.
Yeah.
Right. Thank you so much for joining.
Lovely. Thank you.
Thank you.
Thanks,
Thank you,
everyone.
Abhishek. Thank you. Thanks, everyone. Thank you.
Thanks. Bye.